Greetings everyone. Whether it's the morning, afternoon or evening, we're thrilled to welcome you to Investreks, the ultimate podcast designed for inquisitive minds like yours, ready to delve into a treasure trove of financial insights. Get ready to stride confidently through the intricate world of finance. In this inaugural episode, we are honored to welcome a distinguished guest, Mr. Shivakumar. With an impressive track record of over 18 years in the real estate sector, he brings a wealth of expertise to the table. Mr. Shivakumar is renowned for his proficiency in handling significant land transactions and serving as a trusted consultant on building sanctions and government protocols for substantial real estate projects in Tamil Nadu. Moreover, he holds the role of founder and CEO at Dunning Ventures, a company actively involved in various real estate ventures, including brokerage services nationwide, license services in Tamil Nadu and Karnataka, as well as real estate development in Coimbatore. Let's listen to him now. Welcome, Mr. Shivakumar. I'm very excited to have you on our very first episode of Investreks. How are you doing today?
Thank you very much, Apurva. Kind of you to have called me here for your first session of Investreks. Let's look forward to having a great session.
Definitely, and we're also looking forward to the same. So, to kick things off, let's dive into the concept of investments. So, investments could mean different things to different people. The way you perceive investments could be very different from the way I perceive investments. So, what I'd like to understand from you is, what do you think about investments when it comes to a broader spectrum of things where people are trying to secure their financial future?
Okay. Investment. Let's look at it this way. To understand the concept of a certain idea, let's go backwards. If you look at history, after the 1757 when the American Revolution happened, until then people did not speak of investment. They spoke about insurance. Okay. Because most of the lands were farmlands. The farmer would want to secure his crop for next year. So for that, he would insure his produce, save it so that the next year if there's any calamity, it gets saved. Now, what happened is investment came up after capitalism and credit came up. So when I knew I could borrow money at a rupee and make it 10 rupees, I had the leverage of credit, right? Mm-hmm. So credit and capitalism actually led to growth. So investment, from insurance, investment came. Investment is a thought process of growth, right? So today if you ask me, why would somebody invest? Unlike the earlier years, today you invest towards growth. Mm-hmm. How do you do that? You do that through different methodologies available in the market. It could be real estate, which we are in, could be stocks, could be in anything. But investment per se is to beat the certain amount of money that you're making to make it a little more higher. That's why you invest, so that you safeguard yourself for the future. So I think this is how investment came as a thought process.
Perfect. Yes. So you're talking about building wealth,
correct,
right? The concept of wealth building came in during that time. Okay, perfect, sir. Thank you so much. Yeah. So like you said, there are so many, investment options that we can look at. But what I believe is, it's important for one to, do their homework in terms of, the financial aspects when it comes to investments. Their risk tolerance levels, their long-term and short-term goals, and things like these. So I believe that doing so would help them set the coordinates to their financial journey. So that's basically like laying a track to their financial journey, right? So, and also if you talk about, inflation isn't something new to us. So inflation has been impacting many lives around the world, and there's no denying to that. So inflation is one of the reasons why people invest in real estate, because the appreciation level of real estate is really higher when compared to the inflation rate. And thus they look at real estate as a medium to build wealth. So apart from inflation, what do you think are the other factors that are basically driving that, force for people to invest in real estate?
See, if you see, investment per se happens in a lot of sectors. Investment happens predominantly, people used to invest in gold, mm-hmm, and then in real estate. So these are hard assets, okay? Until the 1870s when the Bombay Stock Exchange came up and said that you can start start trading shares and bonds. Now India as a country evolved, then they started practicing the art of trading in the stock markets, right? Inflation, if you see inflation for India, say post independence, we've been hovering around less than the 8-10%. Now your question is, how do you beat inflation? How does this happen? And why do people choose real estate as a model to invest in real estate? Right. India as a country, if you see, most of the people who have bought land have beaten inflation. To say from 1970s when the inflation was the highest, from then till when you had the last COVID was your last crisis, and then you had 2008, 2009, you had the global economic crisis. All these times, people who held on to land beat inflation. I'm not saying there are stocks that did not beat inflation, but my point is real estate is a very tangible asset, right? And real estate has been a very proven method where people buy land. But when you buy an apartment or a home, there are certain markets in India that may have given you the appreciation, but not in entirety.
Right.
So why people choose real estate? Because it has proven this from 70s to 80s to 90s. Although gold must have done its work, stocks must have done its work, bonds have a certain but their returns are very fixed. The investment is fixed, the returns are fixed, the risk is very less. Stocks, your risks are very high, your returns could also be very high. Real estate is not like that. Real estate for you is very classified. You know whether this should move northwards, whether this should move southwards. And we as a market are very resilient. You would not want to sell a property that you picked at 100 rupees at 95. You would never do that.
Yeah.
You would wait for the day that it becomes 101 or the worst 100, right? So in resilience, real estate has become a good product through resilience.
Yeah, makes absolute sense. We wait for that break-even point. We don't go anywhere below that point.
Correct.
Right? And apart from inflation, what other factors do you think are influencing this trend of people moving towards real estate?
See, apart from inflation, you see, today people don't, everybody thinks that the shortest distance between two dots is always a straight line, right? And money has to multiply by itself. But today we are in a fast-paced world, right? If you say before 2014, until the digitization era came in India, to understand the credit worthiness of an individual was very difficult. Today, you can track any transaction through, his mobile phone or his email ID, and you'll understand the credit worthiness of an individual. Now, every individual today wants to make himself credit worthy, right? Whether it's 1x, 2x, 3x, 4x, we don't know. It depends on the aspiration that people have.
Yeah.
Now, hearing so much news about Indian real estate, India being at the tip of consumerism, where Apple has opened its stores in India. They did the same in China in 2008 when China's economy was about $4.5 trillion, and India's economy is about $3.5 trillion. And today China has 45 stores. Now Chinese economy is about $18 trillion. Now Apple has to open a store in India. He knows that this is a safe bet, right? He knows that India is in the progressive stage. When you hear all these news buzzes around you, you also want to be driving in the direction where you want to multiply your money. So the aspirational class in India, rather than beating inflation, they have moved towards thinking of the process of creating a growth career for themselves. So they understand financial strength or financial health helps them enable to go to the growth trajectory. I think that's one of the large drawn thought processes.
Okay, perfect. So yeah, that makes absolute sense. Yes. So you've captured the essence of real estate investing quite accurately, Mr. Shivakumar. And to make this a little more interesting, let's move on into a comparison that most people grapple with. So that's basically your traditional investment opportunities versus real estate. So you can see that the traditional, investment opportunities are performing well, and they have in the past too. But this trend of people shifting from traditional to, real estate investments is quite evident right now. And like I already told you, because even that is performing well, what other reasons do you think is making real estate the most attractive option out there?
While I continue to speak to you about the aspirational class that India is developing, 20-25 years before, if an individual had to buy a property and he had only about ₹1,00,000 and would like to own at least 100 square feet in a very prime area in the country, he would not be able to do that. because assume the plot size is only 100 square feet and he wants to buy it, he may not be able to buy it because the price will be very high.
Right.
Today, we have come up with concepts where somebody can own a fraction of a particular asset in that particular space.
Fractional ownership.
Fractional ownership. So people have moved beyond real estate and thought of fractional ownership. People have moved beyond real estate and thought of investing in something called REITs, which you see in the US is a $1 trillion market in the US. We are about $7 billion. I mean, that's the size that we are operating in. We have only 4 REITs or something like that. Okay. But the good thing about India is that even if you have 250 rupees, you can go buy a REITs unit. You can buy a unit with 250 rupees. Now, this gives ability for everyone to invest. The different, I mean, always it used to be land, it used to be building. Today we're talking about building with rental income, right? So that creates a cash flow for you. Now this secures my life again. This is something that was not there in the past. I would not say it was not there in the past, but I would not say so professionalized in the past. That is there. And there's fractional real estate as we spoke about, and then there's REITs. Now in the Western countries, real estate also is treated as an alternate investment platform. It is not the traditional investment platform like your stock or your bond or whatever it is. And in the West, you have the opportunity to invest in crypto, in non-fungible tokens, NFT or whatever. I think India also has the opportunity to invest in crypto. I think the law, they're framing the law so that you can invest in cryptos and all that. As a market, we have given our consumers enough and more to take. So when you have choices, you'll always like to operate in choices. So the traditional markets were for the earlier generation. Now this generation is very clear. They know, even if it's an alternate investment, even if it's real estate on fraction, whether it's only debentures given to you, whether it's only a small paper given to you, it need not be a tangible asset. As long as it provides them the financial safety, they're fine with it.
Okay, makes sense. Yes. And my next question was again going to be about the same, because you see this shift of youngsters investing in real estate, because earlier it used to be people, like you said, who had money, who had savings, who had a lakh or more, but now you can see a lot of people investing in real estate who belong to the younger generations. I believe that it's also because of the growth in the demand for real estate and thus the value in real estate, and they're able to perceive it as a an option that can build wealth. Again, like in the first point we were talking about building wealth, right? So they come to that point, and I believe that this trend basically takes root from the historical performance of real estate. So I believe it's been performing pretty well in the past, and it is still continuing to perform well now. So if you could talk a little bit about how real estate has been in the past, and that shift to the current, and how the trajectory has been so far.
See, mostly India and China were economies that were actually leading in the forefront at least 1,500 years before. We were a very, very strong economy in the world. We were top 1 or 2, I think, in the global economies. And these are measured in terms of GDP, as we rightly spoke of. I'm elaborating my answer so that you get to understand why I'm speaking about this. So India's population and China's population would actually be equal to the amount of GDP.
Okay.
That's why we were number 1 or number 2, right?
Okay.
Now what happens? Now if you see a country like America that has only about 30 crore, but today holds 25% of the world's GDP and leads the economy. Why did this happen? This happened purely because the consumerism explored there, right? Land explored there, the opportunity there explored. Same thing is happening in India now, okay? I don't know 20, 30 years before whether we would be able to think of buying a product like an Apple phone, or anything. We would have never thought that this would be available in India. We were always thinking that this had to be imported from the US West, and I had to use it here. But significant changes in smaller markets. I mean, as I said, from 1970 to 2020, you see, real estate has beaten everything. Has beaten COVID, has beaten inflation, everything. Now, what has happened? The smaller markets in India, what they have also given an opportunity for people there to actually see the appreciation of land and building there. This has predominantly taken over the mindset of people today. So they see a lot of opportunity in India. They see, in the next 20-25 years, India is going to script history. So, and when you start hearing this, and you think you should not want to lose out, that is why you start investing in real estate. I think that's the only way out. People think. So
more like FOMO, the fear of missing out. They don't want to be a part of it.
Correct.
Right? Makes sense. So before we end this episode, I want you to give a golden takeaway to all the listeners. So yes.
The golden takeaway, I think, is somebody said that they don't make any more land on land. So if you have to pick up something, pick up land. If you want to develop something, develop it. And as I keep saying, real estate is the epicenter of any economy.
Absolutely.
Everything revolves on land. The most underutilized resource on earth is land. The most, significantly, if I have to tell you, in India, the potential of land has not been unearthed. If we have to unearth it, I think we have to look at smaller markets in India, start going to smaller markets, tier 2, tier 3 towns, and start investing there. Look at developers who have created a significant history, have delivered good products. Look at them, buy products of theirs. Because in India, if you see, it is the real estate supplier who makes more money than the developer. If you have thousands of developers in India, only a few of them have crossed market capitalization of 1 lakh crore and more. Whereas if you talk of suppliers who do paint, who do plywood, who do wires, they've raised 60,000, 70,000 crores. So an industry that does so much, I think it is high time that the industry takes a different trajectory altogether. And I'm sure we are in a phase of growth that nobody want to miss out on in India.
Definitely, and I think that was food for thought. That made me think of a lot of things that weren't earlier in my mind, and I'm sure that's the same to the listeners as well. And I think we've come to the end of the podcast, guys, and thank you, Mr. Shivakumar. It was a delight having you here on our first episode of Investreks, the inaugural episode, and I think we had a truly special guest today.
Thank you very much, Apurva, and I hope all of you trek in your journey of investment with Investrek. Keep listening to Investrek. Thank you very much.
Thank you so much.